talking about banks, we have TamilNad Mercantile Bank that is in focus in today's trading session. And we have now Krishnan, who is the MD and CEO at the bank, joining us to talk about the way forward coming in for the bank as well as their Q3 earnings. A very good morning to you, sir. Thank you so much for joining us in ET now. And firstly, let's take a look at the operational data when it comes to Q3. Your interest expenses, that's on uptick approximately 44% on a year-on-year basis. That, in fact, actually led to pushing or rather making sure that your net interest income growth actually came in much lower. If you would tell us what's your outlook when it comes to the interest expense from here on, and do you think that this will actually stay elevated for the next quarter as well?
See, the interest expenditures was elevated because you know that across the industry, there is a tight money position. The cost of funds have increased in the entire industry subsequent to the last December. So we are comparing year on year, and then we say that the net interest income, there is a muted. As you rightly observed, it is due to the increase in the cost of deposits. What I expect is maybe for a quarter or so, the same level will continue. I don't expect that there will be much more increase, while there may be a marginal increase, but still, I will only say that let us look into the other aspect, what the margin we have, the net interest margin. If you look into, we had a net interest margin of 4.1 during the previous quarter, that is sequential quarter. For the quarter ended September, we had a net interest margin of 4.1, and it has marginally come down by 2 bips. I expect that the cost of deposits will continue to be at the same level. Maybe a marginal increase is expected, not much high in the overall cost of deposits. And the guidance given by me to the market about the net interest margin, the NIM, is above 4. We stand by that. We will continue to be. We are comfortably at 4.08 as of now.
Hi, very good morning, Mr. Krishnan. This is Shrishti also joining in. While we saw the elevated interest cost, we also witnessed the fall in the provision. Credit cost was at a multi-quarter low levels. What led to this decline, and how should one expect this number going forward?
See, the credit cost will continue. We gave the guidance of credit cost of around 0.5 to 0.75. That is what the guidance we gave to the street at the beginning of the year. You can very well see that the credit cost is much contained, except for the last quarter, where the credit cost was little higher due to one of account which is big for our bank size, slipped in the Q2. That is the reason the credit cost in Q2 went up. Otherwise, the credit cost is much under the control. I expect that for the year, what we gave the guidance of 0.5 to 0.75 is very, very comfortable. We will be able to contain with that. 9 months credit cost comes to around 4.46 or so. So I don't expect any increase from that level.
Right. We saw the NPAs actually that were low in this quarter, but specifically we saw some additions coming in from the retail and MSME book. But will we see NPAs reducing further on, and also if further on, in fact, to the levels that we had seen in Q4 of FY23?
See, I expect that the NPAs may go down in the quarters to come. That is what is my expectation. Particularly in the Q4, I don't expect much of the slippages. The recoveries and upgradations will be definitely equal or more than that. So question of the NPA maintaining here is very, very comfortable. And as you observe, the NPA of 1.69, which is a very minimal gross NPA, will be improved further in Q4.
And lastly, Mr. Krishnan, wanted to understand that for the company, any plans of adding new branches that would like you to share, and any geographical expansion that you are targeting for?
See, we had a plan for opening about 50 branches during this current fiscal 23-24, of which in the 9 months initially we have opened 17 branches. The other branches are in opening or in the advanced stage, like the premises getting ready, the furnishings going on. So I expect that by end of the year, I expect that I will be able to open the remaining 33 branches. As far as the geographical is concerned, If I look into 17 branches what we have opened, out of 17 are outside Tamil Nadu and the remaining 15 are in Tamil Nadu. I have been telling the viewers, the channel earlier also that though I have large number of presence in Tamil Nadu, but even that I have not been in some of the prime places where there are good potential in Tamil Nadu itself. So we are expanding to those places. We are also expanding to other parts of the country wherever the potential is there. In fact, last fiscal, at the end of the last fiscal, we expanded to the Northeast. We opened a branch at Guwahati. So we have been doing that. The whole idea is that over the period of time, we want to make this bank as a pan-India bank.
All right. Thank you so much, Mr. Krishnan, for joining us on the show to talk about TamilNad Mercantile Bank's way forward going ahead and how the Q3 also transpired. That was the MD and CEO of TamilNad Mercantile Bank.